Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast, where we're back once again to continue to educate you so that you feel more comfortable and confident so that you can have more control investing beyond your backyard. I'm your host, Billy Keels. And on today's episode, if you've ever wanted to understand how to raise capital legally in the US, no matter where you live, then guess what? This is absolutely the episode that you're going to want to listen to and watch all the way to the very end, because today's guest, hold on to your seats, used to play in a rock band, owned and operated a record label that enabled her to travel to places like South Africa, around the United States, Canada, and Europe, was also a university professor in finance and accounting on the undergraduate as well as graduate side of things, and is the partner of Crowdfunding Lawyers LLP. Today's guest is none other than Jillian Sidoti. Jillian, welcome to the show.
Hi, thank you so much for having me. What a nice introduction.
I'm so looking forward to today's conversation. Like before, I was like, well, let's just keep talking forever and ever. And really looking forward to this. So Jillian, first, before we even get started, I always like to kind of help people understand different places in the US. And if you can help us understand today, where are you interacting, or where do you live? I guess is the easiest way.
I actually live in a place called Temecula, California, which is 60 miles north of San Diego, about 90 miles southeast rather. Oh my God, my directions are off. Southeast of Los Angeles. And it's considered Southern California wine country. We have about 40 to 50 wineries out here. And actually one of them is my client. I did their offering for them to raise capital for it. So it's a pretty awesome place to live.
Okay, fantastic. So that's really, really nice. So on the left coast of the U.S., left and down to the bottom. So awesome. Yeah. Thank you for that. And maybe I'll share a little bit more about my wine tasting days back in Paris, but that's for another conversation. What is the most positive thing that's happened to you in the last 24 hours?
Do you want to know what's funny? The first thing that comes to mind is I cleaned my refrigerator.
Love it. Love it.
And also we built bunk beds. My kids and my husband and I, it was a true family effort, built these triple bunk beds. So we got a lot accomplished, and my kids are so happy, and they built it right alongside us. So we got it done. A job that would have probably taken my husband and I, 3 days, we got done in a matter of a couple of hours, and just so excited to have those for them.
That is awesome. And by the way, I've seen those pictures. I've seen pictures of the bunk beds. They were posted on social media.
Yep, that's right. It was a family effort. It was pretty fun and awesome.
Okay, fantastic. So that's getting the refrigerator clean and also the bunk beds up and going. So listen. So we're on the roll.
Day.
Yeah, this is what happens. This is what happens. So listen. So I get kind of giving everybody a kind of our overview, but can you tell us a little bit more about yourself, Jillian, and also kind of help us understand, where does the SEC fit into what it is that you do in helping people get involved with real estate?
Right. So if you're going to raise capital from investors in the United States, you have to have certain paperwork and make certain disclosures to investors. That is your obligation under the law. And you have to raise capital from investors in a very particular manner, because, look, the United States government has an interest in making sure its citizens and also people outside of the United States are protected from scams or, what could potentially be bad investments. Now, they can't totally protect you from bad investments. But what they can do and what they have done is put some rules in place to make sure that when money is being raised from individual investors, it's being raised in a very particular manner under a certain set of guidelines.
Fantastic. So that is really, really helpful. So in terms of those guidelines, like, so what are some of the things that you want to take into consideration when you are getting involved in a security, I guess is probably the right word?
Yeah. So like what you really want to be looking at is how the company is going to run and who the investors and who the company is that is raising the capital and what they're raising the capital for. So you want to really focus on how much disclosure did this company give you? Did they tell you the good, the bad, and the ugly? Or are they just telling you the good? And if they're just telling you the good, that is that's probably not something you want to necessarily invest in, which sounds counterintuitive. You're right. You don't want to hear about all the bad and ugly things that could happen with your money. But the reality is that's actually a legal obligation for them to tell you that, number one. And number two, that is reality. There's risk in everything, in any investing opportunity. There are no guarantees. And especially when we're talking about investing in real estate, there are things that could happen, like, I don't know, a global pandemic. So you want to make sure that you hedge against those possibilities.
Okay. And so you talked about, so you want to be able to hedge against those types of possibilities, recognizing that every investment has some type of risk. But you used one of the words, you were talking about disclosures. So can you help us just understand, make sure that we're clear on what it is you mean when you say what is a disclosure?
A disclosure is just something that is like, if you think about a newspaper reporter and what a newspaper reporter is taught in, day one of newspaper reporter school or journalism school, is that they are taught that there are a key set of questions that they should ask in every article: who, what, where, when, how, and why, right? So what we want to add to that is how much. And that how much obviously is money. How much money do you need? How much money is going to be used? How much money is the sponsor going to get paid? So, but we take all of those questions, those journalism questions, and then that is what we should be disclosing to the investors in terms of, and that's just really simplifying it, right? So the investor wants to know, how are you going to use their money? Where are you going to use their money? When are they going to get their money back? Why are you doing this? All of those things. And then the what is what could happen. Like, what could happen if the economy turns, and how do we hedge against that? So for example, some of my clients are, panicking right now. And then some of my other clients, and fortunately, most of my clients are in a great position right now because they're not panicking. Because what they've done is they've put aside, they've done the what if. What if something happens to the economy? Obviously, no one predicted a global pandemic. No one predicted that. But what if, rents go down? What if, there's a natural disaster? How do they hedge against that? Reserves. Did they put enough reserves in place to make sure that they could handle those situations?
Okay. So really the disclosure is making sure that they're asking the questions, understand the things that could potentially impact that particular investment positively or otherwise, and having that transparency. Okay. Perfect. So, and you're talking about a lot of the aspects. Yeah. So you're talking about a number of the aspects, Jillian, that also have to do with, you're talking about things like reserves.
Yeah. So the other thing you want to do is you really want to have, just a plan. And also, here's another big thing that I find real estate entrepreneurs make a mistake of, and what you as an investor want to be looking out for. Did they adequately capitalize? You had mentioned early on that I was in a rock band and I started a record label. One of the big reasons, the reason my rock career was cut short and my record label was, a failure for all intents and purposes. And really the only reason, because we had the talent, we had the smarts, we had the connection, we started getting the connections right towards the end. But the one reason we failed was because we were undercapitalized. We did not have enough money in our record label to make it really successful. And so we were constantly band-aiding, wounds that required sutures. It just didn't work. And that's what you're going to find if you find that you're going into an investment opportunity. Make sure that there is, that the sponsor, the company, has adequately planned for those reserves, has raised enough capital, has planned to raise enough capital.
And so this is one of the areas also to one of your strengths, right? Having even taught at a university on the finance and accounting side of things, that combined with the legal. So what are some of the types of questions that someone could ask to make sure that they understood how well capitalized a particular investment was, or the types of reserves, so that they can really understand kind of what the risk potential is?
Yeah, I think, that's a couple of different questions. They can ask, hey, how much does the property cost, and how much are you saving for capital improvements? And that's the way you can kind of word it, is what do you have saved for capital improvements? Do you have enough put away for that? And then there might be an answer of, well, we don't need any capital improvements because we're buying a turnkey property. That's a perfectly normal answer. So then the next question would be then, okay, how much are you putting away for reserves? And really what you want to be looking for is a margin of 10 to 20%. 10 to 20% of the total capital raised is what you really need to have away, or that sponsor needs to have away for reserves.
Okay. And in that case, Jillian, if let's say I'm asking that question and I see that it's like 5%, what, as a potential investor, what can I do? What could I do to see if that particular investment opportunity can move forward or not move forward, meaning that they would have more reserves or less reserves? Or is there anything I can do?
I mean, there's not a whole lot you could do. You could ask them why. Just ask questions. I mean, asking questions, that is your right as an investor. That is actually, I won't even say it's your right. It's your duty as an investor to research. If you just take things on their face and then invest, you are going to lose money. So you need to ask questions, because maybe those questions will lead you to the answer you so desire or need. Or maybe it's going to tell you, like, yeah, I shouldn't be investing in this, and to move on. So if you see somebody who has a 5% reserve or no reserves at all, ask them why. Just ask why, and see what the answer holds. Like maybe they give you a terrible answer and you go, okay, I'm glad I dodged that bullet, and you run away from the investment opportunity. It is okay to walk away from potential investment opportunities.
I'm so glad that you said that, because sometimes it feels like when you talk to people that they feel like they have to go in, and just by being able to ask those questions. I know we talked a lot about being able to ask the 5 whys. And if you get to the 5th why and you really don't understand it and it's not clear, then it's probably time to be able to walk away, because there are probably other opportunities, which is great.
Absolutely. There's opportunities everywhere. So you as an investor what you really have to do up front is invest your time to research and know what you're getting into. You should be vetting these deals. And by the way, the people who you're investing in should be vetting you as well. They're going into business with you. You're going into business with them. So don't take offense when an entrepreneur asks you questions about you, because they're going into the same business relationship. And actually, you should find that to be a good sign that they want to know who you are just as much as you want to know who they are.
I love that piece of advice. That is absolutely, it's phenomenal, because it is definitely a two-way street. It's not just about you being in part of a deal. It's about making sure that the sponsors also want to create that type of relationship with their investors. So,
right.
Jillian, so you're helping us really to understand like some of the key questions that you can ask, and you're helping us to understand that it is okay to actually realize that this may not be the particular opportunity, and you want to find out which is the right one for you. Could you help us maybe understand? I know that there are at least the SEC, and when you're putting the securities together, there are some particular types of documents that you should
Yeah.
also be looking out for? So maybe you could help us also understand what are some of the different documents that an investor would be looking to go through or read through.
Yeah, so the number one document that you should be receiving, but actually shouldn't be reading, but you should be receiving, this is going to sound strange, and I'll explain what I mean in a second, is the private placement memorandum. If an issuer has not taken the time to give you a private placement memorandum, that is a problem in and of itself. And the private placement memorandum is the story of the investment. It's where all these disclosures are. It's all the risk factors, all the things that could go wrong, what the story of the investment is, answering all those journalistic questions. That's what the PPM is. Now, if you don't get that document or receive a document that looks like a private placement memorandum, or is called an offering circular, an offering memorandum, something to that effect, then you should not be investing. I will say that straight up front. You should not be investing if you don't get that document. But that's not the most important document. The most important document is it's one of two things, just depending on the form of the company. It's an operating agreement or a limited partnership agreement. And 9 times out of 10, if you're investing in real estate in the United States, those entities that are buying that real estate are a partnership or a limited liability company. Most of them are limited liability companies. And limited liability companies are ruled by an operating agreement. And the operating agreement is actually going to tell you what all your rights are, what your distributions are going to be, how the company is going to wind down, what that looks like, how transfers can go. It's the legal document that binds you all together. And so that is the document you're going to be held to. But it should also be accompanied, or actually the private placement memorandum is accompanied by the operating agreement. So you really need to have both of those documents and understand that the controlling one is the operating agreement.
Okay. Perfect. So you talked about the PPM, or the private placement memorandum, really tells you about a lot of the different risk aspects that we talked about before.
Right.
And then what actually is the controlling document of the company, and hopefully that's the right wording, is the operating agreement. So it's really to make sure that those two, at a minimum, that you've been able to go through and read yourself or your legal counsel.
Absolutely. And then what's going to happen is, generally speaking, you're going to get those two documents. And then the third document is called a subscription agreement. And the subscription agreement is the agreement between you and the company, where you're saying, yes, I read all your documents. I understand what's in them. I am who I say I am. And now I'm willing to invest under those terms and conditions of those documents you provided me. And here's my name, here's my number, here's my personal information so that I can receive distribution checks, or here's my personal information so that I can invest, whatever the case may be.
Okay, perfect. So those 3 documents, and then I happen to know that there are, at least in the US, and we don't want to get into a lot of technical jargon, but there are really 2 that are important, or 2 primary documents that, two different types of profiles of investors. Some that would call them, that you would call, getting into the Regulation D, and maybe you could talk to us a little bit about the difference between a sophisticated and an accredited investor, and kind of what that role plays.
So, in the United States, the law divides investors into 3 different categories. The first type of investor is our highest and best investor. It's what's called an accredited investor. And there are people who make $200,000 a year as an individual, $300,000 a year as a married couple, or have a net worth of $1 million exclusive of their primary residence. And that group of people is really, less protected under the law. The law doesn't seem to feel that it needs to protect those people as much, and those people have more opportunities to invest under the law, just based on how you put things together. The second type of investor is an investor called a sophisticated investor. And what a sophisticated investor is somebody who probably doesn't have the net worth or income of an accredited investor, but has some kind of experience, or has a history of experience and having done deals where they are sophisticated enough to understand the risks associated with investing. And then everybody else is considered an unaccredited investor. So that's the rest of the population. So those are our three types of investors. And you really want to, if you're an issuer looking to raise capital, then what you really want to be looking for are those accredited investors. Those are your best type because they have the most money.
And so this is really helpful as well, Jillian, because outside of the U.S., they having these different types of profiles are not necessarily as prevalent, and so being able to help educate us once again on the different types of profiles and really understanding where you would potentially as an investor, where you would be able to place your capital. It's also very, very helpful to want to understand. Now, another question. So, and I know that you have done the legal aspect for lots of different types of businesses. And I'm just curious, Jillian, what has been like the most unique type of business that you have put together capital for?
It's actually outside. I have a couple, and I'm actually going to veer outside of real estate if you don't mind.
Yeah, sure.
But I have one company that buys collectibles, they call themselves geeks. So I'm not naming them geeks, but geeky type of collectibles such as Magic the Gathering cards, Pokemon cards, things of that nature, comic books, and then what they do is they actually put it in an LLC, in a separate series of an LLC, and allow people to invest in those collectibles on an individualized basis. And these are collectibles, and I didn't know this world existed until I got into this, but these are collectibles that the common investor is not able to buy, and now they're able to own fractional ownership of that type of investment. So, some of these Magic the Gathering cards go for as much as $100,000. I don't know anything about it, but I thought that was very interesting that they actually found this plan of how to get the crowd to invest in those individualized assets. I also represent another company right now, super risky investment. Want to be very clear. They're not going to make money for at least 10 years, but they're attempting to print a 3D heart. So like for heart transplants. So in other words, you take the cells from your own body, throw it into a 3D printer, and they're going to print a heart and shove it into your chest. That's a very scientific way of putting things.
Extremely scientific.
So that's a very exciting, opportunity. Not for everybody. Definitely that is a roll of the dice. You don't know if that's going to work out, but they're really smart people. So we'll see how that works out.
Well, what that demonstrates, what that helps us to understand is really that you really can have securities around a number of different opportunities, right? And so real estate is one of those particular areas. It's one of the areas that you and your firm are extremely well versed in and do extremely well in. But just also wanted to give our audience an idea as to some of the other different things that you could also be doing from a securities perspective. And I know that our time is limited, but I know that one of the things that is really important to you, Jillian, is being able to go out and lead with value in everything that you do. I mean, I just having met you before and the way that I've interacted with you and your team and the way that I see that you continue to add value over the different social media channels, I'm really curious if you could help us understand when you define like lead with value, can you help us understand what that means to you?
Oh, yeah. So when I was, I actually felt like I really learned this very early on in my career. I joined a group as a young lawyer. I wasn't making a lot of money. And so I decided to join this group in town to like network with people and just kind of get my footing as a young lawyer. And I found this group called BNI, and they're all over the world. They're called Business Networkers International. And their motto was givers gain. And I've never forgotten that. Yeah, I didn't actually get a whole lot out of the group because it turns out that not a lot of people in BNI groups are looking for securities attorneys. But I always stuck with that motto, givers gain, and givers gain, like it's true for, it's truly true for anybody, And so I have instilled in my practice, in my firm, in all my attorneys and everybody who works here is that we have a giver's gain mentality. Yeah, sometimes we're going to get taken advantage of and it's going to suck. And we're going to be mad and we're going to really regret, or not, maybe not so much the word regret, but we're going to wish we hadn't invested so much time in perhaps one person. But, when you start going with the attitude of giving, whether it's information or something like that, or giving money away to charitable causes, for example, not just throwing money out the window, but giving money away to charitable causes, that's when you really kind of start seeing you do that enough, it will come back to you. You will find that it will come back to you. So for an investor, what you want to be doing is really be giving your time to perhaps if you find an opportunity that isn't awesome at the time, but that person is a good person who's running that opportunity. Give them some tips. Tell them what you've learned. Tell them what you know. Give them that knowledge that you have, because you never know when that person or entity or that new real estate entrepreneur who wanted you to invest in them will come back with a better deal later, and will think of you because you spent that time with them to educate them and let them know what might not be good about this particular deal, so they fix it for the next time so that they can come forth with a better deal for you next time.
So once again, I love that. And I appreciate you sharing your perspective on that with us and giving us a concrete example, just, your experience with BNI and being able to, lead with value and be able to give and give. And eventually when you give, it does come back. It may not be today, but eventually,
yeah.
It
usually isn't today, right? Yeah. So this happens almost on a weekly basis for us, but for a perfect example, last week I had a guy write me and he goes, "I'm embarrassed. I haven't written you. I was supposed to do a deal and you gave me all this time and then I never called you back and I never got back to you and now I'm ready to do a deal." And that's exactly what I'm talking about. I'm just so used to that at this point. That happens, like I said, weekly. So things that I did, months and months or even years ago come back and really, come back to me in a very positive manner. So I never regret it. Even if at first, I see somebody go maybe to my competition, that's fine. That's on them. I'll get somebody else to, come to me. No big deal.
I love that, because also too, having worked in the sales profession for over 23 years, it's one of those things you provide as much value at an individual level, at a company level, and you realize that not everybody is going to be your client, but eventually, if you do the right things and you do them consistently, then you improve your opportunities of making sure that you have the right clients for you and for your business. And another question I'm curious about. So, because there is a part of our audience who is, they're looking, they want to be able to go out and they want to be able to start to syndicate or aggregate capital for particular types of projects. And, but maybe they haven't done their first project yet. Yeah. So just curious, just from your perspective, Jillian, when should someone be reaching out to you, reaching out to your team, so that it's valuable for the individual and their company, and it's also valuable for you and your team?
You know what? I really want you, when you're really saying, I'm ready to do this, I want to do this, I'm going to have to do this, because it's become a point where I need to raise capital, individual property. The time I want you to call me is at LOI, which is letter of intent, not at purchase and sale, because purchase and sale, you're just going to cut your runway short. And there's no risk in calling me and having us get started on that work at that time, because we will rewrite your documents for another project at no additional charge if you don't close on that deal. And then if you want to do a fund, call me when you're like, I think I'm really ready to make this investment, this commitment. to start doing a fund. And what I mean by that is a real estate fund where you don't have a specific property in mind, but you might want to buy a bunch of different properties. Like I think here soon I'm going to get a lot of calls for buying single families and also for notes. So those are people who are starting funds for sure.
I was going to say, would you unpack that part about the funds? Because I think a lot of us we are clear on what it looks like when you have a specific project and you're raising capital for that particular project. But the funds, and because people are talking about it more and more, I think it's still kind of nebulous for some people. So if you could help us just really understand what is a fund and when would someone want to actually look at using a fund?
A fund is, where we're saying that we're going to do something, and we're going to, and I'll stay to real estate right now because you can actually do a fund for a variety of things. But in real estate, all of my bigger clients are actually funds. They're not individual syndications. So what it means is that the investors or the entrepreneur is saying, I am going to target properties that look like this. And they might not name a specific property. And then they'll go out and raise anywhere from 5, 10, 15, 20, all the way up to $100 million in order to go out and buy as many properties as they can in that category with the money, the resources that they have. So for example, one of my big clients is a guy here named Grant Cardone, who's a big real estate entrepreneur here in the United States. And so he has these big funds that say, hey, we're going to buy these big multifamily properties. We don't know which ones we're going to buy, but we're going to buy $50 million worth of them. And we do know what they're going to look like. And he gives a general idea what they're going to cash flow this way, that kind of thing.
And Jillian, so when you give those types of descriptions, is it best to have, can you leave it at a high level description, or do you want to say that we're going to buy these types of asset in a particular location, or it could be anywhere? Are there any kind of...
It can be as broad or as narrow as you would like, but my thing for, clients who want to do it overly broad is that you're going to create investor confusion. And when investors are confused, they won't invest. So you really do want to have at least some clarity on what your plan is. If you look at one of the big companies out here is a company called Fundrise. They have a ton of different funds, and some of them are really broad. They're like, okay, we're going to buy growth properties. In other words, properties that they believe are going to grow over time in terms of value. And then they have another fund called an income fund, which is like those properties that are going to generate income, immediately and pass on cash flow. And then they might say and we're looking at these categories, and they might name 3 or 4 different categories, office, office, self-storage, apartment buildings, whatever their categories might be. And they'll define what income versus growth means and so on and so forth. So you can do broad ones like that. You just want to make sure that they're explained well enough that the investor has a complete understanding of what's going on.
Okay. So also always making sure that the investor has a complete understanding of what's going on is absolutely key. Awesome. So Jillian, I want to just keep talking to you forever and ever and ever. The thing is, I know that time is limited. So we're going to get to the portion of the show where we like to call it, or I like to call it, I guess, the going long final 3 questions. But the thing is I never ask the going long final 3 unless you tell me that you're ready for me to ask you the going long final 3. So I just have a question for you. You are ready. Okay. You're so ready. You were ready before I get the question out. Perfect.
I know.
Awesome.
I'm sorry. It's funny. I'm so anxious because I know what the questions are. And I'm so excited to answer them. So yes.
All right. Perfect. So here's question number 1. As you know, I live in Barcelona, and I love being able to continue to connect people and want to really help understand more and more which European cities are at the top of everyone's list. So I want to know from you, what is your favorite European city, either that you visited or is still on your bucket list?
I have a ton on my bucket list, but my favorite one that I've visited so far is Milan, Italy. And if you don't mind, I'd like to tell you why I love it, because I want everybody to go to Milan. So my family, we planned this major trip to Italy like a year and a half in advance. And it was always my husband's and my dream to go to Italy. And a couple of months before we were supposed to leave, he had a very bad injury where he could not even get in a car, let alone a plane, like a hip injury. And so, we sat down, we talked about it, and I was like, okay, I'm just going to take the kids and I'm going to go by myself. I'm going to go to Italy by myself. And what ended up happening is, like 3 days before we were supposed to leave, it was Easter Sunday, and we're at Easter Sunday dinner, and my husband wasn't there, and everyone's like, what are you going to do? How are you going to do this? What are you doing? And I said, well, I'm just going to go by myself. I couldn't find anybody else to go with me. And at that dinner, my aunt goes, I'll go. And she met me in Italy, and we went to Rome and had an amazing time. And then we're like, oh, and now we're supposed to go to Milan. But I didn't know anything about Milan. I thought it was all about fashion, and we just happened to, part of this trip was going to Milan. Mm-hmm. So I wasn't really keen on the idea of even going to Milan. And we got there, and it was amazing. Mm. It was like clean and beautiful, and had, the people were friendly, and there was so much great art and everything there. And then I brought my little book, and then we saw this cathedral, the Duomo Cathedral.
Oh,
and
yes.
I'm sure if you guys didn't see this, Andre Bocelli did a concert here on Easter Sunday. If you have a chance, go look for it on YouTube. It was a free concert on YouTube he did. But this place is absolutely gorgeous. Even if you're not religious, you have to go see this. You got to read about the history of this cathedral. It's absolutely breathtaking and amazing, and that was my experience in Milan. So
wonderful.
Sorry, I'm a little passionate about
yes, I didn't. Like, I couldn't tell. We couldn't tell.
Hey, listen. You didn't have to go through this.
Hey, I love this. And by the way, the Duomo is gorgeous. It is absolutely beautiful. It is one of those things. Going to Milan, you definitely need to stop and see it. So yes. So, and you can talk about all the wonderful European cities you like. So, so Milano, as they say. So there's the vote for Milan. And then I'm going to assume as well, Jillian, that you've probably had one or two kind of, because you're successful and you've built successful businesses and you've helped others to do the same, that you've probably had one or two mistakes that you made along the way. And I'm just curious if you could also share, what is that one lesson that you would pass forward to others?
Yeah, I would just say that if it doesn't feel right, there's a reason why it doesn't feel right. And I was never one of these people to like go with your gut or what have you, but I believe in that now, having been in that situation where you go like, if this seems a little off, you don't know why, you can't articulate why, still keep that in mind and go with it. Don't go forward if it feels off. Okay. For whatever reason. And that has hurt me and helps me. Hurt me because I didn't go through with that and go, okay, this doesn't feel right. And then helps me because later on I learned that lesson and I went with it.
Okay, awesome. So if it doesn't feel right, don't go forward. Listen to your gut. Sounds great. And then lastly, and I know that you are already a published author. You have your book that's out on the market, The Crowdfunding Myth. And so I know we can talk about that, but at the same time, for all of our guests who are published authors, I'd like to know, aside from your own book, what is the one book that you are recommending nowadays?
A book that has totally changed my perspective on things. And I don't really feel like you have to be a religious person to read this book, but it helps, is The Power of Now by Eckhart Tolle. It will totally shift your mind from if you're dwelling on past pains or you're incredibly nervous about the future because of whatever, worry not, because this book will get you through that.
Love that. And I read that book last summer, and it had a very positive impact on me and the things that I was doing, and just making sure that I was doing as much as possible to live in the now. So Power of Now. So thank you very much for sharing that. And you know what, Jillian, you have shared so much greatness with us today, and just really helping us to understand the role of the SEC attorney, understanding what the Securities and Exchange commission really is doing. You've helped us understand that you can also have a life before that, going from rock star in a band and learning from things like not being fully capitalized. And that's helped you moving forward. And it's helped you as you and your firm continue to help other clients. You've helped us understand what it means to actually lead with value, what that means for you. And you've even shared your favorite European city, which is Milano, which is in a nice little story to go along with that. And look, I want to keep talking to you, and I know I've said it a couple of times, and I'm sure that everybody that's watching us and everybody that's listening is like, how in the world do I get in touch with Jillian, with her firm, with her team? So can you please help us understand what is the best way to get in touch with you and your team?
I know this is going to sound strange, but honestly, if you come to Facebook and you look for our private Facebook group, Crowdfunding Lawyers, that is a centralized way to get in touch with all of us and assure that somebody's paying attention, whether it's our, one of our admins or one of our attorneys. Everybody's on that group page. And so if you go on that page and you have a question, and this goes back to the giver's gain, if you have a question that you want to ask that would benefit the entire group, we ask that you ask it in the group. If it's, general in nature, of course, if it's private in nature, you can schedule an appointment with us. But that's the Crowdfunding Lawyers private Facebook group. Just look for Crowdfunding Lawyers, you'll find it. And we'd love to have you.
Okay, awesome. So Crowdfunding Lawyers in the private Facebook group, go there, request to get in, let them know that you heard us here, met Jillian here on the Going Long podcast, and get in and ask your questions, and givers or gainers. So I love that. Jillian, this has been just so much fun and so educational and such a value add. Really appreciate you taking the time to join us here on the Going Long podcast. And so thank you very much. Really appreciate it.
Thank you so much.
Awesome. So, and also too, thank you, each one of you, the Going Long audience. Really appreciate it. As we continue to get going, as we continue to build, we'd love for you to go out and share today's episode with at least 2 to 3 other people. I mean, Jillian shared so much awesomeness, and by you doing that, you're also helping to grow our community with other really like-minded individuals, and it will be fantastic. If you like the conversation, also feel free to leave us a 5-star review, so help to bring and once again attract other new like-minded people. And I'm really looking forward to welcoming you back on the very next episode. And until then, go out and make it a great day. Wow, don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.